Hi everybody, welcome to another update on the Stock Screener. I wanted to introduce the concept of concavity of the NPV. Imagine you have two companies and their cash flows come in like this or this. Which company would you buy? Would you buy company A or B? So company A will have a lot of cash flow coming in the first years, and then it will drop off. This is called concavity down. So first it rises and then the sales go down. Company B first starts slowly and then it will rise. So that's concavity up. Now, if they have the same NPV at the end, 12, for example, for both. So here the company will stop existing and here as well. So they have the same NPV. Then I would prefer to buy company A, of course, because you get your money much faster. You get it in 2 years already. And here, after 2 years, it's still very low. Meaning that this one is less risky because you get your money faster than this one. So I prefer to have concavity down companies where the money flows in much faster in the first years instead of needing to wait a long time before it goes up. I also think that if you have these kinds of companies, that these companies will re-rate much faster than these companies because of the risk. These companies re-rate much faster because they already have the cash flow coming in. Okay? So what I'm going to do is go over the whole list of mining stocks and let's see which ones have the best concavity down chart. So first one, Allied Gold. I'm just going to put them all here to get a good visual on it. Let's make it like this to put as many companies on one slide. So here you see concavity up. As you can see, concavity up means less cash flow in the beginning of the years. So less cash flow and then it comes in. And a lot of cash flow comes in. So there's a little bit of risk in the first 3 years when they start constructing their mines. Next one, Epcot Mines. Let's see what this gives. Epcot Mines is just a gold mine that's starting up. They still need money to do that. So there's a little bit of risk here, but this is a pretty linear chart. So it's not concave up or down, it's just linear. Okay, next one. Let's take Asiatic Metals. And this one is this is concave down. So first going up and then less growth. But yeah, they are starting up the mine and they had some problems there. So that's the risk. Next one is Agnico Eagle. So how does this look? This looks like a concave down. Or was it concave up? Concave down, because first it goes up and then in the end it's flattening. So this is not that great, and also the NPV is lower than the enterprise value. So not really that interesting. Next one is alpha min. Alpha min's chart looks like this. That's also a concave down chart, first going up fast and then less, but it's above the enterprise value, so there's upside. But yeah, you can see here the gap. There is a little bit of gap in the first few years. You don't want to see this gap. These gaps are dangerous. You want to see it go up faster in the first few years. Then next one is First Majestic. First Majestic Silver. Which is looking like this. So not a lot to see, because it's clearly below the enterprise value. So there's no upside at all. So next one, Alamos Gold. Alamos Gold looks like this. Concave down, so a lot of upside in the first few years and then flattening out. But you look at this gap, this is, I think, overvalued, depending on, of course, on the gold price. If the gold price goes up, then everything changes. Then we have Silver X. Silver X looks like this. Which is a bit of a difficult one. They have some capex here to build a second mill or expand the mill. So you could say this is a concave up one. So concave up, no cash flows in the beginning of the years and then going back up. So this is a dangerous company, I think, because they have a lot of capex for growth, and so not a lot of growth in the beginning of the years, unless silver goes up, of course. Next one, let's take Amarok Minerals. So Amarok Minerals is in Greenland. A lot of cash flow coming in, and they are probably going to double the resources or even triple the resources. So this could have more mine life, but we don't know yet. But yeah, the cash flows come in pretty fast in 3-4 years. Just need to see if the mine life can be extended. Okay, next slide. We have a lot of companies to cover. Let's take Andean Precious Metals. looks like this. There is upside. Not sure how much mine life extension. I haven't added the ongoing processing facility extensions, but just looking at the current gold mine that they have, there's still upside, yes. And if gold goes up, it will rise more. But it's pretty linear. Yep, maybe concave down. Then next one, Artemis Gold. In construction, will eventually go to production. Oh, this has even breached through my chart axis boundaries. So now it looks like this. There's still upside in Artemis Gold. As you can see here. Pretty linear, but flattening out here, so concave down. Avino silver at the current silver price. Looks like this, and this is a clear concave up company because we have a lot of capex in the first 2 years, and then it will start rising with growing production. So a lot of risk here in this gap, but if you wait long enough, then they will probably increase production, and there will be a lot of upside. Aya, silver and gold. Difficult company to analyze because they have another project, a lot of resources. They could increase production by a lot. So difficult to analyze. But with the current cash flows, this is fair value. Next one. Bear Creek Mining. And I'm going to look at every single one of them today. Bear Creek Mining is fair value when you look at the gold mine that they have, but they have this really big silver deposit that could be worth something. So there is upside, and yeah, depending on if that project goes in production or not. B2 Gold looks like this. B2 Gold looks concave down. There's still a lot of gap here that needs to be bridged, but there's a tiny bit of upside. So not that interesting to me. Cerrado Gold. Cerrado Gold, I don't know what the debt is right now. Could be 150 million. I don't know. It could be less. So we need to see the financials. But looking at this, they only have 5-year mine life. If they actually get above this enterprise value, then there's upside. If it's down lower than the enterprise, then there's downside. So difficult company to give a valuation to, depending on mine life extensions and depending on how much debt they have. I think it's fair value. Then we have Caledonia Mining. This is clearly a concave up company. So not a lot of cash flows now, but a lot of cash flows if they bring that new Bilbo's project in production. There's a lot of capex here. So this is pretty risky because there's this gap in the first 10 years. So not interesting to me. But there's upside if you wait long enough. Let's keep it to the gold and silver miners. Contango ore. Haven't looked too much at this, but latest NPV chart looks like this. Maybe they did some acquisitions, I don't know. But this is a mine life risk. But there's a lot of cash flow coming in. Okay, next one. Calibre Mining looks like this. Yeah, still a lot of gap here. Is concave down, so not interesting. Dundee Precious Metals. This one looks actually concave down, so a lot of cash flow coming in the first years. So this is pretty safe to buy. Only the upside is limited. There's maybe 20-30% upside. But it's the least risky company that I can see right now. Next one, what's this? EDV, what's EDV? Endeavor Mining. Africa company. Pretty steady cash flows, but not enough to excite me. Pretty big gap here, so concave down. Eldorado Gold. Looks very risky. As you can see here, concave up because there's a lot of risk here. And then production will rise a bit and then it goes to fair value. Then Equinox Gold. Concave down, but not good enough. So below the enterprise value, there is a bit of downside risk. Erdene, resources. I think not bad. You get your money pretty fast. Yeah, it's not a bad company, but it's still in construction. And then we have Endeavor Silver. Endeavor Silver. Yeah, that's concave up. Am I right? Yeah, concave up. So they are building Terranera and later on Pizzeria. So first the cash flows will be pretty low, but they will start rising more and more. A lot of risk in the beginning of the years, so not that interested yet. Fortuna Mining. Yeah, fair value. And depending on if they can increase mine life or not. Gatos Silver. Gatos Silver is a bit overvalued. Cash flows come in fast and then flatten out. So not a lot of upside here. And we continue. Galliano Gold. This company looks like there is a lot of cash flow coming in, but not good enough. Aris Mining. A lot of resources, this company, but there is some work to do in the beginning of the years to build it all out. So I would say this is concave up. So pretty high risk in the beginning of the years. Cash flows will be minimal until they build it all out. So yes, it is risky. Let's go to G mining. G mining looks fair value to me. That's why Dundee sold it. Concave down and fair value. Barrick Gold. Barrick Gold is concave down and yeah, fair value to me. So yeah, if you like majors, you can buy it, but I'm not interested. Guanajuato Silver. Yeah, this is overvalued to me. Not a lot of cash flows coming in. So downside risk. Next one, Hawkshot mining. This one is pretty straightforward, going up, concave down, and tiny bit of risk. So yeah, there's a bit of upside, but not pretty high. Hummingbird Resources, the most dangerous stock ever. It's in a unstable jurisdiction and a lot of capex in the first year, so a big gap. But there is still upside if they can execute. The problem is this is all risk. Pretty big gap here. IM Gold. I don't know why everyone likes this company, but you can see this is a concave down company, so a lot of cash flow coming in, but later on it will flatten. So less risk because the cash flows come in faster. But I don't see the upside when you look at the cash flows. Let's not look at Impact Silver. Okay, Jaguar Mining. Jaguar Mining is increasing production. They have found a new vein. That's pretty big. Looks like, yeah, just a straight line, and there's still upside. Okay, next slide. K92 Mining. And this must be the most boring video ever, but we need to get through this. This one is a growth story, but there's a lot of capex in these years. So this is concave up, highly risky due to the cash flows coming in later. So I would not buy this one. Kinross Gold, another major. This looks concave down and below value. I mean above value, so there's downside risk. Line 1 Metals. This is an interesting company. They are ramping up production, but nobody knows how much capex they still need. So this is concave up. There is some risk here that they could dilute some more before it rises, and resources could of course expand. So risky play, but there's upside if the mill is at full capacity. Luca Mining, not bad at all. Going up, they could expand this cash flow charts later on, so it could even be higher. So this is a concave up company, and there is still upside. Lundin Gold. So Lundin Gold looks like this. Yeah, this is clearly concave down, so cash flow is coming in fast and then flattening out. But it's fair value, so I don't see the upside. Minera Alamos, open pit mine in Mexico, very dangerous. But look at the upside. This is one of the highest upsides of all companies, but they need to get the permit, of course. Yes. So dangerous if they don't get the permit. Max Silver. Max Silver is fair value to me. Needs a tiny bit higher silver price to get to fair value. Then we have Majestic Gold. This is a curious company. Extremely high upside, so probably a double. Yeah, what can I say? It's undervalued. Why a double? Because they have a lot of cash, so that cash is not doing anything. Mako Mining. Mako Mining is concave up because they need to build Guyana. So they will be cash constrained for a few years until they build it, and then there's upside. Next slide. Monument Mining. Looks like this. There is upside, as you can see on the chart, and it's more like a concave down company. Then Mandalay Resources, probably one of the cheaper companies. So there's plenty of upside here. And yeah, concave down. Actually, look at this tiny gap. You can see these tiny gaps. That means that there is less risk to buy this because you get the cash flows very fast. Okay, that's how you need to look at this. Next one is Mineros. Mineros, one of my favorite companies to buy. They do have some capex to build Nicaragua, but then the cash flow should come in. So this is concave up and then down. So a very weird chart. But look at this gap. This gap is not that big, so not a lot of risk. Metals exploration. Yeah, metals exploration has problems because they are at the end of their mine life. So what's the upside? There's not a lot of upside until they find a new project to build. Newcore Gold in Ghana. Actually, this is one of the highest upsides, but they are still in PEA stage. That's the problem. It's not built yet. So this is pretty high upside, but risk in the first few years. to get it financed and all of that. Then Newmont Mining, where is it? Newmont Mining, biggest gold miner. But is it the best to buy? Not really. It's overvalued. So you need a higher gold price for this. New Gold still has upside, as you can see here. Yes, but look at this gap. This gap is pretty large. Yeah, it has leverage to gold because of the mine life, so it could easily go like this. But yeah, the cash flows don't come in that fast. There's still this gap. I would rather buy this one with less gap. This gap is too large. That's how you check on the risk of cash flows coming in. O3 mining, yeah, maybe not. They have, I don't know why it's going down. Let's not look at this one. Cisco Development Corp. Yeah, why not? Let's add this. So this is a company that's in development phase, still need financing. So pretty big gap. This is all risk. This is all risk. So I wouldn't buy this. And then we have Aura Minerals. Still upside, but yeah, this is a pretty big gap. Okay, next slide. Orezone Gold. Orezone Gold looks like there is some capital needed to bring this online in the first 2 years. So this is dangerous. Pretty big gap. Orvana Minerals. Yeah, this is the Bolivia asset, which is, yeah, they're still financing that. So not sure if that will go through or not. But looking at this chart, this has upside. Yeah, there is upside for Orvana Minerals. But again, this Bolivia asset, that's the risk. Oceana Gold, also one of the ones with high upside that I like to buy. A little bit of a gap here, but there is still upside in the long run. Orla Minerals, Orla Mining. Yeah, this is a growth story, so they still need to bring everything online. This is clearly a concave up company. So first, there is not a lot of cash flow, and if they bring the mines online, then the cash flow will come in. So there's a pretty big gap here. So I wouldn't buy this one. A lot of risk. Pan-African. Pan-African is fair value and pretty big gap. So not interested in this, but it's fair value. What do we have? Still Rio 2. This one is not permitted and financed yet, but could be soon. Yeah, this is the gap, but there's plenty of upside. So if you wait long enough, and if it gets permitted and financed, then there is upside. SOMA.V Gold, my favorite gold miner. Why is it my favorite? Because look at this gap, only 2 years of gap to bridge, and there's plenty of upside. So this is a chart that I like to buy. Santa Cruz Silver. Yeah, this one has a lot of leverage to silver and zinc. A lot of leverage. And that's also where the danger is. If the commodity prices collapse, then this will collapse as well. But currently it's fair value. Pretty big gaps. But again, this is a speculation on higher silver and zinc. Silvercrest Metals, a low-cost silver producer, but it's fair value, actually overvalued. So not interested. Next slide. We're almost there. Just need to get this done. Let's take SOMA Gold. So much data, I don't even see that. Okay, so here. SOMA Gold. It looks like this. Tiny bit of gap to fill, and when they go into production, there is upside. Probably double or triple depending on the gold price. Sotkamo Silver. Silver producer, but their latest results, they had problems with the grades. So this is a grade problem. If the grades improve, then there is upside. If silver goes up, there's upside, but currently there's downside. So it's all dependent on execution. Let's not look at SSR because they have some issues. Then Step Gold, also one of my favorites because of the upside. Upside is around 3-4x right now, as you can see here. But there is some waiting time. You need to wait until they build it. So 2 years of waiting time, and we will see if it goes up or down. Silvercorp Metals. Low-cost producer, but it's in China. That's the problem. It's in China and nobody likes China. But even then, this is fair value to me, so there is not a lot of upside. Next one is US America's gold and silver. They had a very good quarter actually, reduced the costs quite a lot, and now this is fair value, depending on the silver price, of course. But I wouldn't buy it yet. Yeah, Victoria Gold is bankrupt. What do I have still? West African Resources. We're almost there. West African Resources has done very well. Still a lot of upside. That's a good buy, but it's in Africa. West Dome Gold in Canada. Fair value to me, but it's in Canada, so that's good. Cash flows come in fast and then flatten out. And that's it, basically. So we're done here. Look at all these charts and think about which company this is. Are the cash flows coming in fast or slow? The faster they come in, the better. But you also need to look at if it's overvalued or undervalued based on the NPV to enterprise value. But I would buy companies like this, where cash flow comes in fast. For example, SOMA.V Gold. Cash flow comes in fast, plus there is upside. Okay, so that was the video. Just look at all these charts and choose your gold miner. I'll see you next one. Bye.